Hey guys, hope you are all having a fantastic Friday. We have finally made it to the end of the week, and as is common on this channel, I am going to keep this video pretty light on content. We are going to talk about two subjects before recapping today's performance. Some interesting developments have taken place in Evergrande, and we must talk about rising rents potentially fueling inflation and posing a greater threat for the Fed. I have made tons of video covering the real estate market, and talked in great depth about the housing crisis taking place. I recommend you guys into going through this channel's playlist and check out some of those housing videos for a deep dive into it. In fact, this morning I made a video about how the Catholic Church and the Legion of Christ Order are keen on making big profits from investments in rental property. Check it out if interested. Before we begin, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. Evergrande CEO is preparing to break apart the company as an attempt to avoid having it default. Evergrande's Shah Haijun began talks with investment banks and creditors in Hong Kong over a restructuring for the real estate company that could see the developer sell some of its assets as a last resort. While Evergrande remains based in Shenzhen, it has been based in Hong Kong for 2 months. With a massive debt of $300 billion, Evergrande has already missed 3 rounds of interest payments for its bonds. As you all know, analysts fear the potential company collapse could disrupt the entire Chinese economy, therefore destabilizing the global economy as a whole. Keep in mind that Evergrande is the second largest property developer in China. The People's Bank of China has already officially stated that the situation is under control, which signifies that China most definitely does not have the situation under control. Officials have been saying that Evergrande's problems are an individual phenomenon, and that most real estate businesses are operating stably and have good financial indicators, meaning the real estate industry overall is healthy. However, analysts are expressing serious concerns over whether Beijing can curb the problems given the importance of the real estate sector in the country's economy. There have been many changes which have cut off companies from the much-needed credit lines they have been accustomed to. With limited liquid assets, many of these institutions have been unable to finish their developments, which then prevents them from attaining funds that they could have used to pay off debts. Evergrande currently oversees a number of unfinished developments. Furthermore, Chinese state-owned Yusho Property has pulled out of a proposed $1.7 billion deal to buy Evergrande's Hong Kong headquarters building over worries of the developer's dire financial situation. With yet another collapse over the talks for this sale, this represents another setback for the cash-strapped company, which has been scrambling left and right to divest some assets to repay their many creditors who have taken to protest outside their buildings. Yusho was actually really close to sealing the deal in August, but the deal faltered after the board opposed the move over credible worries that Evergrande's unresolved indebtedness would create potential complications in completing the transaction smoothly. What I am most interested in is in watching how long the Chinese government will keep their distance approach from all of this. There is no way a collapse of Evergrande affects their entire sector, and I know the Chinese government is very well made aware of this reality. I look forward to seeing how they will manage this nightmare scenario in the coming weeks. Now, let's move on to our favorite topic on this channel, inflation and rising rents. Echoes of rising desperation from tenants' financial burden being able to afford rising prices for rent are getting louder and louder across the entire country. This is bad news for the Federal Reserve, as it makes the rapid price gains last longer. As we have said many times over, the hike in the prices for rents jumped as owners tried to buy houses during the pandemic, but found that houses were in very short supply as Wall Street and friends were buying every good property in the middle to low income class. Their greed and ambition to turn Americans into renters and rob generations of generational wealth has been clearly noted, and they are not pressing on the brakes anytime soon. They are creating an artificial low supply of homes available so that they can then raise prices, to the point where many people are complaining that the savings they had to buy a house are diminishing as they go into paying for rents that increase by large amounts every contract. Furthermore, we know that Wall Street is investing greatly into political candidates at local levels that slow down the expansion and development of new housing, so that they can maintain high prices in the areas for as long as possible. What this also does is that because there is so little development, developers are forced into making high middle class to luxury properties, because they need to make up for money that they missed out on by the loss of opportunity to make more housing. This makes all prices for properties go up, and due to the almost stagnant rise in increase for wages, people are being forced into making very tough decisions all across the country. Rents are reportedly also being boosted by large numbers of people searching for places with more space and home offices, as the pandemic has shifted into people working from home. I have talked in great detail about all of this in previous videos, but I will say something about this. The government better step up to this growing issue right now if they have any hope of preventing an entire housing market collapse. Wall Street has been throwing billions of dollars into housing because they are parking all their cash into this market, thus creating a bubble. It's only a matter of time before it all erupts. Let's talk about today. The Fed submitted over $1.462 trillion in reverse repo operations for the day. Dark pool trades for AMC accounted for 63% of the total volume today, while GameStop's dark pool trades accounted for 44% of the total volume today. According to Fidelity data, buy order flow for AMC was larger than the sell order flow, with GameStop most likely also experiencing a larger amount of buy order flow than its sell order flow. Let's now talk about performance. AMC traded bullish today, gaining over 1%. It traded pretty neutral during the pre-market. Upon market opening, AMC dropped down to 39.80 before bouncing back strong, reaching over 41.20. It then retraced back above the VWAP before having another run and reaching 41.79. After that, it was unable to retest this resistance again, and fell down to consolidated on the VWAP again around 40.90, which was a pretty bullish point for consolidation. It then broke support close to the end of the day, reaching 40.48, but then it bounced up and closed at 40.74 on the VWAP. We ended above 40.01, claiming a nice well-earned victory against shorters today. As for next week, I will make a video on Sunday talking about where I expect us to move. GameStop traded bearishly, losing under 1% for the day. It opened to a slight dip back down to 182.50 before rising to 186.50. It then retraced back down to the VWAP where it consolidated for a little while. After reaching 187, GME became victim to another short ladder attack that brought it down to 180.88. It traded there for a while before having a small breakout close near the end of the day, where it closed at 183.28, above the VWAP. It was another victory for bulls and apes, as we ended above 180.01. May the shorter tiers fill our drinks this weekend. As for next week, like I said, I will make a video on Sunday talking about where I expect us to move. And that is all I have for you today. Thank you all for making it to the end of the video. Let me know your thoughts and opinions down in the comments. I hope you all have an absolute blast this weekend. I plan on building my first ever PC, so I am looking forward to that. I also plan on going to watch Venom and perhaps going to the beach. Let me know if you guys have anything fun planned for this weekend. If you don't mind and found the video fun and useful, feel encouraged to hit the like. If you want to support this channel guys, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, have a blast this weekend and to the moon.